Ladies and gentlemen, good morning to you. My name is Jeffery. I'm the Editor-in-Chief of Central Banking Publications, and I'll be moderating the panel here this morning. Central Banking is a specialized media organization focusing on trying to address the informational needs of the central banking community around the world, primarily focused on editorial articles. We produce about 10 articles a day, plus research, events, training, seminar, and so on. I'd very much like to firstly thank Governor Jeffery and the staff of the National Bank of Ukraine in particular, and the National Bank of Poland for their kind invitation to participate in the event today. I've certainly found over the course of the past couple of days the event to be very informative. And given the lineup of excellent speakers that we have for our panel discussion, central bank policy signals in informational noise, I'm confident that if I was to issue my own forward guidance, that we would certainly be able to add to some of the knowledge that's been collected over the past couple of days as we run through this panel over the next 90 minutes. And if certainly we don't, then the failing would certainly be mine. So let me just introduce our panel. We have Vitas Vasiliauskas, who is the chairman of the board of the Bank of Lithuania and a member of the Governing Council of the European Central Bank. We have Christine Graeff, who is the Director General of Communications for the ECB. Piotr Szpunar, who's Director of the Economic Analysis Department of National Bank of Poland. Clemens Grafe, who's the co-head of New Market Economics Research at Goldman Sachs. And last but no means least, we have Swaha Pattanaik, who's the Global Economics Editor at Reuters Breakingviews. From those brief introductions, I hope that you'll, and the full bios obviously are available in your packs, I hope you'll see that the panelists should be able to offer some contrasting and hopefully interesting perspectives. Vitas, of course, runs a central bank and votes on the Monetary Policy Committee related to the world's second most, I guess, important currency. You might argue it's first, but Christine, since 2013, has set the communications agenda at the ECB, which, of course, now includes supervisory powers too. Piotr runs the analysis department that produces much of the backbone of the information that informs policy making, and indeed is involved in scripting, I think, some of the communication that comes out from those meetings, and has also acted as an advisor to the governor. Clemens, of course, works at one of the world's largest investment banks, which has activities in markets internationally. And Swaha works for one of the world's leading information providers, these days focused more on opinion pieces, but in earlier roles I noted both as a journalist and an editor for Reuters and for Bloomberg. I'm going to first ask each of our panelists to share their kind of overarching thoughts on this topic, central bank policy signals in informational noise, and then we'll switch on to the four key themes that we were asked to touch on. How much is too much communication, personal reaction functions versus the group, forward guidance, and some of the pros and cons of use of scenario communication. So first, Governor Vitas Vasiliauskas, he's going to share some prepared comments with us. So I'll hand over to you. Would you like to?
First of all, of course, I would like to thank organizers and Governor Jeffery for inviting me to this conference. And of course, it is a big pleasure to be here in Kiev. I will start. So, as the governor of the Bank of Lithuania and a member of the ECB Governing Council, today I will talk about communicating monetary policy, and not only about ECB's experience, but also policy, communication policy as part of the policy toolkit. I think in this morning we have heard stimulating presentations regarding the effects of forward guidance. The latter has become an essential tool to preserve accommodative stance in a low interest rate environment that we have been witnessing in many of advanced economies. Forward guidance in any form it comes is used to influence market expectations by clearly communicating about possible policy moves in the future. And of course it helps markets, businesses and consumers to better formulate expectations and adjust their actions accordingly. We have to admit that in times when the standard monetary policy instruments have been bounded, there is a need for a supplementary tool to help preserve market expectations, primarily about continuous accommodation in the economy. This way, communication about the possible trajectory of the monetary policy tools has become a separate monetary policy tool itself. To understand the importance of this operational shift, we must remember that communication was not always present in central bank agenda. Until not so long ago, central banks were quite, I would say, secretive institutions. For example, the US Federal Reserve used to be silent even about interest rate decisions. And only in mid-90s, the US Federal Reserve started to publicly announce its interest rate decisions in real time. What regards ECB also not always been as transparent about monetary policy as it is now. For instance, accounts of monetary policy meetings of the Governing Council were started being published just a few years ago. So what has changed? I suppose there are two main aspects in this respect. First, why being independent, central banks have become ever more accountable to the general public. And this promotes building confidence through intensive communication about monetary policy, explaining decisions as well as goals and intentions of the policymakers. And this helps strengthen confidence that a central bank is able to fulfill its mandate of ensuring, first of all, price stability. In other words, the purpose of more in-depth communication is not only to reduce uncertainty, but also strengthen central bank credibility. And I think central bank credibility is a very important issue. Second, the post-crisis low interest rate environment set the ground for central bank communication to play a key role and also become much more forward-looking. Economic agents act in a forward-looking way, but have to deal with a vast amount of information surrounded by a lot of uncertainties. Therefore, it is important to lead them and help formulate adequate expectations. In the end, a better understanding strengthens the transmission of central bank policies. As you can see from the survey results in the graph, many central bank governors and academics claim that central bank communication has been intensifying. Also, the use of this tool is widespread. All major central banks globally had to use it more extensively in order to achieve adequate accommodation during the last decade. In the previous session, we heard discussions on the effectiveness of forward guidance. Personally, I can firmly say that among policymakers, there are no doubts that forward guidance helps steering expectations. Yet the effects of forward guidance are not as straightforward as we possibly would like them to appear. Not surprisingly, the results depend on a few things. First, the particular form of forward guidance utilized. Second, central bank's credibility. And finally, on agents' private information and the level of information noise in general. Although, in practice, forward guidance is rarely perceived as purely one or the other. Here I would like to distinguish between so-called Delphic and Odyssean forward guidance. Delphic guidance is a statement of how policymakers see the interest likely to evolve, but makes no promises about the future policy actions. On the contrary, Odyssean guidance policy makers commit to some actions in the future. What is more, the horizon of Odyssean guidance can be state contingent, have an end date, or even be left open-ended. For example, currently the ECB's forward guidance is that the interest rates are expected to remain unchanged at least through the end of this year. Research tends to conclude that the types of forward guidance differ systemically in how they affect expectations and diminish the disagreements in the markets about the future path of interest rates. Not surprisingly, more detailed, more specific forward guidance, for instance, time and state contingent, Odyssean guidance, seems to be more effective in guiding expectations. Intuitively, it is clear, such central bank communication helps tone down some of the international noise and reduce uncertainty. But this should not be interpreted as agitation for a particular type of guidance, as the effects should depend on the interest rate environment we are living in. So, going further, any discussion on forward guidance would be incomplete without touching upon the controversy regarding who is leading who in this game of exchanging information. Is central bank leading financial markets, or have central banks become too dependent on the market reaction function? In other words, are we catering the market? Meaning, are we putting the needs of financial markets, that is largely private investors, before the need of the real economy as a whole? There is no straightforward answer. On the one hand, central banks have to take into account every nuance in the economy, including how financial markets could process signals from the central bank. On the other hand, central banks should not solely rely on how the markets would or would not react. We are all now sailing in uncharted waters, since this high level of accommodation is unconventional, and we see that financial markets are potentially more sensitive to changes. Therefore, now that the major central banks are starting monetary policy normalization, we, policymakers, are extra careful, as we want to avoid negative market reaction. By negative reaction, I mean that we could observe more rapid interest rate increases than we deem necessary to reach our policy target. Therefore, balancing policy normalization pace and rhetoric in forward guidance with potential market reactions is particularly challenging, even though it could be interpreted by some as gathering financial markets. Finally, coming to the issue of future use of forward guidance, as you can see from the graph, most academics and also central bank governors think that forward guidance will remain a monetary policy tool in one form or in the other. This survey from 2016 saw, since we had more time with this tool in play, and I believe this convention is even stronger today. So, is forward guidance here to stay? Personally, I believe yes, it is. In what form? Of course, it will depend to a large extent on the interest rate environment. Moreover, the form itself is not so essential. The important thing is not to close off from the public in this case, not to gradually diminish the communication about future trajectory of policy decisions. I think that there is no reason to remove the policy tool that proved to be useful, even if the environment in which it was introduced evolves. Markets are now used to a certain amount of communication, and reducing it could be counter to the goal of transparency, and as a result, credibility needed for a more effective monetary policy. What is more, it could be perceived as a negative signal, causing unwanted market reactions. Current monetary policy normalization is unprecedented, and it will require well-structured communication in how, guidance in how central banks will to smooth the process. Therefore, I believe that forward guidance has become an effective supplement to conventional tools, especially should we need to have another monetary policy cycle, another monetary policy easing cycle soon, in which conventional instruments would arguably play a lesser role than in previous downturns. To wrap up, I think it is safe to say that central bank communication has become a proper monetary policy tool. The statements following monetary policy meetings in each major central bank gather a substantial attention, and the watchers analyze every sentence to the last word. Therefore, any slight changes in communication, either what is said or what is left unsaid, are quickly noticed and widely interpreted. To water down the statements into something less detailed with a more reserved language would be, in my opinion, going backwards in terms of the pursuit of greater transparency and credibility. The latter is directly linked to the effectiveness in achieving the core price stability targets. So, thank you for your attention. Дякую.
So many thanks, Governor Vasiliauskas, for those interesting comments. Forward guidance is a topic I hope to return to later. I'm going to now ask each of our panelists if they could just share some introductory, overarching comments on our major theme here, policy actions in this sort of informational noise. Christine, if I could ask you to go first, that would be great. Do you want either?
First of all, many thanks for this invitation, and specifically congratulations to Natalia and the communications team for putting together such an inspiring conference. Back in 2017, and we just saw the picture, the ECB put together the first conference on communications, and I think at the time it gave great prominence on the why of communication, why central banks should communicate, the what and the how, and maybe we could also, or I will argue today, the how much still needs a lot of research. So it's great that we're discussing this today, and I would also like to point out that the Center of Economic Policy Research, and I see Michael sitting here, has now opened up a research and policy network on central bank communication that I have the pleasure to lead with Michael. I'm just going to structure these introductory comments really around 2 points. The trends towards more transparency, but also the limits to transparency. And over the past decades, really, we've had this trend, this inexorable trend towards greater transparency of central banks, public institutions in general. And I think as a citizen, that's a very good thing. And so central banks are part of it. They become much more open, they communicate a lot more, they aim to be more effective in their policy, and more predictable, and we just had a panel, and Vitas just talked about the forward guidance. And they aim to be more accountable, and that's specifically since the crisis where we have greater controversy around decisions and a loss of trust, and I think that's key for central banks, a loss of trust in expert institutions. So the underlying assumption concerning the provision of central bank information is more is always better. And much has been written on this by leading researchers that I don't need to recall here. And speaking as a communications professional, I think a central element in this change, in the process towards ever greater transparency, is the changed communications world overall. And some talk about it as an evolution. I would actually say it's a revolution. Everything has changed. The news cycle has changed, the speed, the transmission, the scrutiny are completely different. More importantly, the old assumptions about the hierarchy of information no longer hold. Today's news are produced, interpreted, transmitted, and consumed in fundamentally different ways. Anyone with a mobile phone can be a reporter, a a commentator, a publisher, move opinions, even move markets, or destroy reputations. There is no longer off the record. I think most of us would remember the Eurogroup, where even that was taped by the former Greek finance minister. You have leaks, you have tweeting out directly out of meeting rooms and important meetings that maybe shouldn't be communicated. So enhanced transparency really is an effective and powerful approach in coping with that revolution. And Vitas, you just mentioned the accounts, and that is one of the ways we've moved in the direction of effective transparency. Prior to 2015, there was the press conference and the introductory statement. But that also meant that there were backgrounds, there were leaks. You could, if you really wanted to, you could find out what was happening in the governing council. And you could also use it as you wanted for your own purpose. But with the publication of the accounts, the positions, the reasoning of both sides of the arguments, the balances of voice or public, and there was only one goal to this. It was to make our reaction function much clearer. And I think that really worked. So while this is all positive, I think the second part are the limits to transparency. So what is the ultimate destination of the transparency journey? Are we heading for the see-through banker? Is it just a matter of time before we have TV and cameras live streaming out of the governing council room? And I think that that would be wrong. There is a good reason to question the underlying assumption that more is always better. Simon put it very clearly, there is a challenge. The challenge is the wealth of information, but the poverty of attention. So we actually already have an excess availability of information, skewed signal-to-noise ratios, rational inattention are real problems. So the unlimited transparency and too much communication can also be a suboptimal outcome. Why? First problem, cacophony. Especially for central banks who care about the clarity of the message, too much communication can lead to cacophony. And Alan Blinder said very pointedly, a central bank that speaks with a cacophony of voices may in effect have no voice at all. Or you have a second issue, the own echo chamber, where basically the circularity of signals with the echo chamber, within the echo chamber of central banks and the financial markets. You end up being trapped in your own bubble, as it were, and it becomes a self-referential discourse. What is the third problem? It's the reduced quality of the debate inside central banks' decision-making bodies. Too much openness will also impact the quality of the debate or the opportunity to debate in a certain way. And this is, for instance, there is a need for space of deliberation away from the spotlight of public and media scrutiny. And that has been recognized in the EU Freedom of Information rules, for instance, applying for the ECB. And those authorize the banks to refuse disclosure of documents that are used internally as part of deliberations and preliminary consultations. Ultimately, what do central banks need to do? And what are we focused on? It's building trust. And the relationship between greater transparency and trust is not straightforward. Researchers like Rachel Botsman actually point out that the very fact that public institutions need to be transparent is evidence that they have lost the trust. The ECB has done research on pillars of trust, and they show that credibility, ethics, attention to the welfare of the people, and responsible action, as well as success, are the most important defining pillars. So transparency per se is not the cure for all. And what we really need to be looking for is effective transparency. And I'm sure we'll be discussing that later on, but I'll leave this with you for an opener.
Thank you very much, Christine. Piotr, if I could ask you to go next, please.
Thank you very much. If you allow me, I stay here because I don't have any speech, and I can only fully agree with my colleagues here. Let me only add a couple of thoughts to the subject of communication of monetary policy and central bank communication in more general. First of all, I think that the building block here is that the observation or explanation of the stagflation made by Milton Friedman. The prices do not result only from the interplay of demand and supply, but also they are determined by expectations to a large extent. Inflation depends not only on the output gap or unemployment gap, but also on expectations. And that's why expectations are crucial. And communication is about expectations. So not only communication is there to promote or to increase transparency of central banks, which serves accountability, but also is a monetary policy tool. Information about main tool, which is interest rate, typically in normal times at least, is also a tool, and that tool is used by central banks very effectively. What the proper communication of a central bank should be, first, I think there is a kind of standard information, including press releases, press statements, and the crucial element, inflation report with inflation forecast or conditional forecast, whatever it is, macroeconomic forecast. And that is a kind of disciplining tool in discussion, also a benchmark for discussion, also not only for the decision makers, but also the recipients of the information. And what should be a proper communication policy? Definitely this, but I would say that also it's very important that you have a broad range of people who can understand what you do and who can really follow your actions. Of course, we are not naive to believe that the average citizen is very interested in monetary policy or central bank's policy. As yesterday there was a brilliant comment that rather black holes and the book of Stephen Hawking is more popular than the central bank actions, although the black holes luckily do not affect our lives yet. And monetary policy, yes, does. It does. So I think beyond standard monetary policy communication, who is mostly for professional recipients, for professionals, for the markets, for banks, there must be also a broader communication in the direction of education aimed at increasing economic literacy among the society. And that's not only this, because people are not so much interested, there is a lack of attention or deficit of attention. There must be also something which I would call marketing, aimed at strengthening the reputation of a central bank, trying to explain people the simplest things, what we do, because the currency is a fiat currency based only on confidence, and we have to really support that confidence with our actions. The communication policy is the perfect tool to do so. Thank you.
Thank you very much, Clemens.
First, I want to thank you, like everybody else. Thank the National Bank of Ukraine for inviting me and having me here. I mean, it's great to see this audience and to see how much, because we can see how much progress the National Bank and this country has made in the last few years. This would have been unimaginable 5 years ago. Now let me talk quickly about the topic I'm asked to talk about. And I must say, 5 years ago, if I had to say, can I dissect the signal from the Central Bank of Ukraine, I would have said, I usually came out of the meeting more confused than I went in. And that was partially about basically meeting people that a lot of them were very differently trained from myself. And there was a huge communication gap between them and us, right? That has certainly changed, as we can see here. Now let me turn a little bit more seriously, maybe to the topic. I mean, I think it's in general true that in the 90s, into the 2000s, we made a great progress in being able to distinguish signals from informational noise and basically making monetary policy much more predictable and reduce volatility. And this was a big factor in our view in contributing what was called the Great Moderation, right? Now, it's obviously true that things somehow went wrong in the global financial crisis, and nobody can run away from that. But it's not necessarily clear to me that monetary policy itself had that much to do with it. Now, how did we make all this progress? Well, we learned much more about how interest rates basically affect the economy. We learned inflation targeting with credible targets is a good idea. The banks basically over time became much more credible in doing that. The market as well invested a lot more resources in understanding these things because there was a value in doing it. And I think all these things basically contributed to what I would think was a positive outcome. Now, there's clear reasons why we live now in a different world. In the financial crisis, we know we had a lower bound. There were reasons why we had to change policy, but any of this, or change policy tools, but any of this comes at a cost, right? And it comes at a cost for the reasons that basically we gained before. If you think of the taper tantrum, right, there was a huge communication failure, I think most people think. I mean, what was the communication failure about? I think mostly was that there was no clarity, or people had very little idea of what is the link between QE and activity and inflation, right? And clearly there was a big gap between what central banks thought and what the market thought, right? And you basically go back to the discussions, or you basically open those Pandora's boxes that you actually had closed, right? So I think we always have to think about, okay, there can be a benefit in what we are doing, and there was clearly benefit when we were in the crisis, but we also have to be very careful that we are now not trying to overlearn, right? I mean, there's a downside to introducing all these things that I think should not be ignored.
Thank you very much for those comments. Swaha, please share some of your thoughts.
I want to touch on two topics. One is the audience. So I'm speaking on the other side of the fence. I am part of the audience that central bankers communicate to. One is the audience and the other is the issue of transparency. The governor of the National Bank of Ukraine spoke yesterday about clients. There's one set of clients that's perhaps getting a little less attention as central banks focus very much on the public and the simplifying of the message and comprehensibility, and that is the machines. They're part and parcel of the financial markets, but there are increasingly, thankfully not in my role as a commentator or in central bank journalism, but there are increasingly machines writing the news, and there are definitely a lot more machines reading the news, perhaps directly from the press releases that the central bank is putting out, that you are putting out, and they will scrape it and they will look for keywords. So the nuances, and we've been talking about the trade-offs between nuances, uncertainties, some of that is going to go through a sausage machine by a machine and is not going to be given its context, and that's worth bearing in mind about keyword searches, things like that. It's also worth bearing in mind because the market situation has changed, even in developed markets. You have liquidity that can be illusory. The nature of regulation and the imposition on bank capital requirements means that liquidity disappears very quickly, even in Italian, German government bond futures. It doesn't have to be a Swiss franc style heart attack for the market. You can get very large moves. So if there is misinterpretation or overinterpretation, prices will not necessarily come back to where they were once that's been clarified by the press office of central banks. The other bit on your audience is, I've heard quite a bit over the 2 days about segmentation and the need to sort of target particular audiences in the way they will understand best. And you have, central banks have two fan clubs who will follow them through whatever they put out, wherever they put out. The journalists who cover them and the financial market people who follow them and trade. They look on financial markets, and that's the client base for some of the major news organizations, look on every speech, every bit of information is nowcasting for central bank policy meetings. So every bit of information is like nowcasting that you do for macroeconomics to get a better idea of what the result will be at a policy meeting. In which case, the simplification of the message may be taken up by the wrong people. Let me give you an example of the Bank of England. Perhaps it's a little invidious, it's one I know closely. And the messaging around linking inflation, that inflation target was definitely their mandate, but the policy rates were linked also to moves on unemployment. Below a certain level, unemployment was the message, that we wouldn't look at interest rate moves, hikes, before the unemployment rate got there. What the Bank of England was trying to say is this is a necessary but not sufficient condition. That's not something that anybody's going to say on the TV news, and it wasn't said. It was said very clearly, we're not going to raise rates because unemployment has to get below here before we even think about it. So when unemployment got down to those levels, lawmakers, not policymakers, lawmakers started to call Mark Carney unreliable boyfriend. That's a tag nobody wants in central banking. And I'm sure he didn't like it either. So that's one of the problems with segmentation, is that there are two groups that are following you across the board. And on transparency, I'll pick up on, I think I agree mostly with what Christine's saying, but rather than my views, let me give you two quotes, as a good journalist would, from Fed officials. First is the former Fed governor, Kevin Warsh, who's speaking a few years ago, who said that because of this push for transparency at the Fed, I don't know what it's like now at the Powell Fed, but in his time, he said policymakers read from prepared remarks, put their sheets down, and then read on their smartphones. He said Blackberries, but I think times have changed, while colleagues talked. And if anybody wanted to know what people really thought, it was in the corridors, over coffee, and that's where the real conversations took place. John Williams, also of the Fed, said the minutes were so detailed that we're, quote, getting ourselves into a transparency that's actually stopping us from having a conversation. That level of transparency means there is far more noise, because people will talk to journalists and express their views, and that will be found out. And there's a discrepancy. As soon as there's a discrepancy from the consensus narrative, that's a story for any journalist. So the transparency brings some risks with it as well, both for the communication and noise it generates.
So thank you very much for those comments. I think we haven't heard a lot about the focus on the machines that are reading some of this communication over the last couple of days, so that was very interesting. And of course, touching on the last point that you mentioned in terms of transparency getting in the way sometimes of some of the decision making, I mean, that dovetails nicely into our first topic, which is how much is too much communication in monetary policy and financial stability. Vitas, if I could ask you, maybe turn to you first on that. I mean, would you like a live TV feed at the governing council meetings? Is that something you would be favourable for? Do you think it would help make the debate more insightful?
Yeah, interesting aspect, Chris, but my answer will be surprisingly no. Because I think value is the balance, so and of course it's time for discussion and discussions, and it's time for decisions. And of course, in nowadays everybody wants to know everything, but I think it is better not to know how and from what material sausages are produced. So it's better, to consume them. So that would be my answer to the question.
Yes, Christy, maybe I'll turn to you. I mean, the ECB's general approach, I think, is it called effective transparency rather than absolute transparency? Perhaps you could explain a little bit what that means, and then where you see these border areas. Where have you felt it was appropriate to go down that route towards transparency, and are there some areas that you kind of think might work but not really appropriate or not for your institution or not ready at this moment in time? Is there anything you can share on that?
Yes, thank you. Maybe start with a pretty simple premise. I'm not going to talk about sausages, but looking at the doctor's Hippocratic oath, do no harm. And I think especially on the sensitivity of communication in central banking, that is something that needs to be taken quite seriously. And the second point would be think before you communicate and ask yourself the question why. And on the point as to why, it really is to it's to advance the debate, it's to help the thinking and reduce any politicizing around it. But I think maybe one can think around 5 elements of it. And first of all, there's been quite a lot of research done on the complexity of the messages. And the Bank of England started it, other central banks are doing it. The ECB certainly is focusing on the layering. That is not communication. Layering is also a policy act, what you take as the simplest level. But it does work. So for instance, on the financial stability report, we've been experiencing with this, and having a separate landing page, having a very simple message, has actually increased the readership, the reading of it by 280%. And given the importance of the subject, that is a result of pretty... The second element is to make it relatable, especially if you're talking to the larger audiences. What does it mean to me? Again, I think it's a sensitive subject because you can be accused of politicizing it. I think the UK has seen it, but there's been other examples as well. Themes are key, and if we believe that the 1.8 or 1.5% is what everyone's talking about, I think they'll probably be talking more about climate change and inequalities. So really maybe picking the big overarching themes, because after all, central banks are there for people, and putting all our actions to these themes. That's what we're aiming at. The language, I think, is clear, and you can use a lot of the basic Orwell rules. And then finally, and I think that's underestimated, is look at who's talking. If we focus on having only a few policymakers, typically male and older, and if you contrast that with the result of the Edelman Trust study that says that people trust people who are like me, then we need to also look at who's talking, and we need to make sure that we have a diversity of speakers on the same message, but also diversity of speakers. And I think if you do that, you enhance your transparency, you enhance your communication, and you get to this effectiveness of the tool, always having to bear in mind that any transparency will have a cost.
Okay, thank you. Piotr, where do you see this sort of border of where the limits of transparency are from your perspective?
Exactly. I think there is a broad consensus that too much transparency can do only harm or cacophony. However, when it comes to specific solutions, the only consensus is that the TV online live coverage of the MPC meeting is not necessarily the best idea. Then, however, there are different solutions, and I think that every central bank has to elaborate its own way, of course, in the framework of the legislation as well. But having said that, I must make a reservation based on that, what I said, that I'm not criticizing anybody, but I'm saying what I, as central banker, would advise ourselves and what I wouldn't. So for instance, as I mentioned, inflation reports with forecasts, I didn't mention the forecast for future interest rates path. We have never applied that. A couple of central banks, including the Riksbank yesterday, there was a nice presentation, and they do it. However, there are a lot of problems with that. First of all, in many cases, it proved that markets predicted central banks' interest rates, future interest rates, better than the central banks themselves, which of course produces a little bit let's say, reputational problem. But there is even much more serious argument, because once you publish such a forecast, then how you can convince people that it's not your obligation, not your commitment, but it's rather a conditional forecast, exactly as the forecast for inflation is also conditional, based on that set of information we know now, and based on our best assessment how to read that information. That's the first thing. I would mention other things, like, for instance, announcing exchange rate forecasts or some other. However, everybody has to find out own limits, and definitely one size does not fit all. That's a couple of a grasp of thoughts on that I have. Thank you.
Okay, thank you very much. Clemens, from a market practitioner's perspective, where do you sit on this more and less transparency? What are the things that you really value, and are there things that end up just causing confusion?
I mean, I must say, I sometimes want to sleep, so I want to know that nobody talks in that time. No, I mean, I don't have too much to add to what was said on that topic. I would stress something that Piotr also said is, for instance, with respect to future disclosing models that basically have an endogenous interest rate, disclosing that into the market, in my view, is actually problematic. I mean, South Africa is a good example of that, that has a model and they disclose it. And yeah, they will tell you it's a model-generated interest rate that they will not follow, but it creates a huge communication problem for them, right? So there can be too much disclosure on these things that are actually not helpful. I want to focus on a slightly specific thing that obviously is closer to my heart, is how the communication is basically done and how the transparency is handled with respect to the investing community. And I think that's quite different in, I think, where you set the threshold on transparency is quite different in emerging markets to developed markets, in my view. And just to give you one example, I think in emerging markets, for instance, it does make sense for the central bank to hold closed meetings with a group of investors. I know that why do I say that? Because we have relatively under-researched market. The communication is, the markets are not as well covered anywhere else in the public debate. And you can easily basically get a disconnect between what the central bank actually thinks and what the market thinks and what they think of each other, right? And in that sense, in those specific circumstances, I would say, look, I mean, I know it's not ideal, but I think the alternative can be much worse, right? I mean, Central Bank of Russia, for instance, is a good example, right? I mean, they used to do it regularly, have those meetings, and there were frank discussions. Then they went to an open meeting, and the discussion has basically died. Why? Because the analysts all come in there, and the analysts are all competing with each other. Now, nobody is going to ask the question that he really thinks is interesting if he has his competitor sitting next to him, right? And so I think sometimes we have to distinguish what is optimal in emerging markets and what is optimal in developed markets.
Interesting. So,
you'd be shocked if I said...
Yeah, just one moment. So Christine wants to make a comment.
Go for it.
No, I just want to comment on that, because I think it's everywhere, actually, that point. And if you so call it, investor relations functions of central banks is underdeveloped. But yet it's key that both on the monetary policy side and on the banking supervision side, actually, that the central bank knows, have the investors really understood, or how do they understand it? And having those conversations, which will not happen with a camera, would actually improve the decision making and the policy thinking. And at the same time, I think we also have more that debate now on the banking supervision side. If we want to strengthen the banking markets, we want investors to come into banks, they need to understand better how is the supervisor going to speak to banks, what is the guidance, and understand, which bank am I investing in and what is the thinking of the supervisor. And I think there as well, we still have questions on transparency and how we address this, which are quite fundamental if we want to improve on those fronts as well.
Thank you. Swaha, please.
I was going to say, you'd be shocked if I wanted less information. As I was going to say. I mean, there's transparency and then there's true transparency, and that's two different things. There's transparency in the sense that as journalists get a lot of information, there's more to sift through. But the more managed that communication is, the more incentive there is to try and winkle out the differences in the narrative, disagreements behind the scene. I mean, that's the story for any journalist. It's like a good short story. I think Cecilia yesterday was talking about narratives. Narratives are about tensions, and they're about what's changing. So a speech that has one slight modification from the previous speech, that's what anybody's going to focus on. Otherwise, why did you bother making this new press release, new speech all over again? So the difference, and also if there are tensions and it's being stifled perhaps with some consensus communication, it will come out because people have an axe to grind. They have their point of view that they want to get across. The one thing I would say about the background briefings, it depends how they're done, and I think there are questions whether asymmetric information for investors who are able to make money from that information is a problem for central banks who are supposed to be accountable, and how that is handled. What I would say is there is very little point in having large briefings, as there was at the IMF by the Turkish delegation, this IMF spring meeting, where you have 100 investors or whatever turning up, and no journalists allowed in. Don't expect that to stay secret. It would be better to let people in to make their own mind up, rather than get sort of intermediated versions of what was said and what the perception was, because the perception is going to heavily colour the story at the outcome. So keeping people out for that sort of large briefing is pointless, I would say.
Thank you. I'm conscious of time a little bit. Chris, so I wanted to move on to the next category. Do policymakers' personal opinions help to interpret the policy reaction function, or should they be speaking in a single voice? Christine, if I could turn to you first. You sit on the Governing Council meetings. You hear the range of views expressed by the council members, some of which subsequently emerge, you say maybe less than they used to. What's your experience of the pros and cons of the individual policymakers expressing their views versus the efforts to have a committee with a single voice, and what constraints, I guess, do you place on the policymakers?
I think first of all, it can be seen as quite reassuring to have a diversity of views. It's a safeguard against groupthink, and it's also a guarantor against, it helps on robust decision making. Now the ECB has put certain rules to help each other, balance both having different views and also having one message. So on the collective communication, for instance, you have something that we call, to discipline ourselves, you have the quiet period just before a monetary policy decision, which is 7 days before. Policymakers shouldn't make statements on policy. Now, that actually can be quite challenging if you have a rumor emerging just before the quiet period. How do you deal with that if you've put yourself into that discipline? I think one challenge is if policymakers come up with their opinions before a governing council on the premise, on the premise for a central bank is that it's data driven. So how can you make statements on the decision that you plan to take if you haven't seen the data? And that can actually then be counterproductive for a healthy discussion in the governing council. On the other hand, I think it's extremely important for governors to talk after policymakers, to explain after the decision has been made. We've got the introductory statement, which is really the only piece of information which is signed off, which represents the collective view of the governing council. And then you've got the first opportunity with the president giving his press conference and giving more color, typically also a little bit on, how was the decision making, was it consensual, unanimity. But then we need to rely on everyone else going out and explaining to their constituents in their languages. I mean, we have more than one language to cater for, what it really means for Europe. And there, sometimes you will have different interpretation, but I think, we've got one statement showing the view, and then the personal interpretation that is important and has worked well.
Thank you. Vitas, obviously you sit on that body, so I mean, are you broadly, I know Christine's sitting next to you, are you broadly happy with the way that works? Or, I mean, would you personally like to see, and we're saying we don't like the idea of groupthink, would you like to see a bit more debate in the open, perhaps, as one sees sometimes in maybe the US or to the north in Sweden?
If my communication boss says, I cannot agree, so, yeah, but I'm joking. So, I think to have different views is a good thing, and it is very healthy for discussion, for decision-making process, and for organization as such. But to have different views and to communicate is two different things. So, and I fully agree with what Christine has said, that we have silent period rule, and it is very important, before the meeting to have that rule in mind and try to not comment, especially 4 times per year when you are discussing hard data, and how you can say your opinion without having in mind, hard data. After the meeting, I think it is no problem. So, and it is very important, especially for the domestic public, to explain what was the decision, how it was made, how you came to such kind of decision. Single voice, I think, is also very important factor because it strengthens signalizing function of the decision-making process. And also the consensus process, or let's say try to reach a consensus, is also very, very, very important thing. And I'm happy that I am the youngest or the newest member of the Governing Council of the European Central Bank. And I remember maybe just 2 meetings where we voted. Other decisions were made on the base of consensus, and I think it's very important.
So, Piotr, do you have any thoughts you'd like to share?
Yes, let me start with a simple observation. There are different kind of committees, definitely, starting from a kind of, I would say, autocratically collegial decision-making bodies through genuine collegial, just to individualistic committees. And to a large extent, it can be also determined simply by law, by the Central Bank Act, how the decision-making committees are composed and how they work. So I think, however, there is no consensus in literature that one or other solution is better for predictability of the decisions of the central bank. And that's why I would say everything is good. Since the economy is definitely not a kind of deterministic system, there must be also some divergence of views and different kind of approaches, discussion. When the central bank is univocal, everybody knows it's artificial. So there must be exactly something important going on behind the scenes, and maybe boiling discussions and quarrels even. Whereas to pretend it's univocal is definitely not good. Why? First of all, it's not genuine. Second, because it cuts off the markets from very important information, and namely from the information, what is the motivation of each decision maker in the decision-making body. And since I mentioned the standard communication, and one of the elements is also publishing the track record of voting by names. So once a member of the decision-making body is clearly against the decision taken by majority, it's his good right to explain why. And that's why when the NPC members just talk a lot, it's not bad. About that risk you mentioned, Christine, I think a good consensus or good practice is what we have in our central bank. The members of the MPC agreed upon that there is a blackout period 5 working days before the meeting. So it solves a lot of problems. 2 days after the meeting. That's a kind of self-disciplining tool. And finally, let me say that in most cases, at least, the decision-making makers are professionals, so the risk that they say something which is really at odds, it's not very high. It shouldn't be high, at least. That's more or less, I think, about it.
If I can pass you, yes, to Clemens, next, actually.
All right. I think for me, the decisive thing is, can I actually use that information from an individual member to learn more about where the discussion is and what the future decisions are likely to be? And I would agree with Piotr. I mean, what's very crucial there is that I actually have some information on what the distribution of views in the council is. I mean, I can find myself in a situation if I don't have that, and I have somebody with a totally out of consensus view, basically, but very outspoken, basically being on the wire every day. If I don't know where the rest of the council is on this, right, it just adds a lot of noise, right? If I know there was one guy who sort of said, rate should go down 300 basis points, while everybody else said rate should go up 300 basis points, then I kind of know I can ignore that.
Right.
So I think the two somehow have to go together, because in the end I need to be able to read something from it that helps me basically predict interest rates.
Yeah, Swaha, do you think there's a danger that messages sometimes can get confused? And I guess also we've seen in some countries where there have been very public disagreements on policy boards. I think of the case in Sweden between the governor and the former deputy governor, where it seemed that the debate continued past the policy decision being made. But I'm interested in your views.
Yeah, I mean, there's differences, and it's also in the ECB's history, there have been violent disagreements, but it generally tends to be about very, very important things, when it's not just about an intellectual, well, you could be right, there's a margin for error, I disagree with you, I fall on the other side. So these tend to be very fundamental differences, and that plays out. And both institutions, most of the institutions where this has had a massive spat in public, the credibility is intact. I mean, the institution survives. Where I think the sort of heterogeneity of voices is useful for a central bank, not just for us as reporting on it, is when you get inflection points in an economy or in monetary policy, and you can judge that somebody who is a hawk is actually moving over to a dovish. So Mr. Knott saying something that is dovish means a huge deal to the market. So having had a sort of history of him speaking is useful, because when he changes his mind about the economy, it tells you something where the center of gravity is in decision-making. It can also be useful in central banking to have somebody who's a bit of a maverick to go out and send out a trial balloon, because you have plausible deniability as a central bank, but you have some element of knowing how the market might react, which is a useful function, I think, for the institution.
Thank you. Christine, if I may, just picking up on when there's some fundamental disagreements that do take place and have taken place, for example, on the governing council, what is it that you're looking towards? Are there frustrations if people seem to just have fairly dogmatic positions? Should they be maybe, I mean, looking at the data in terms of coming up with their latest viewpoint on a certain aspect, for example? What frustrates you, I guess, I'm interested in learning.
I think people are entitled to have differences of opinion, and especially if it's after the governing council or in the governing council, they have all the data. Sometimes I actually also look slightly to the role of media, who are making a bigger deal of the difference than there is. There may be just a fundamental difference on policy or on reading of the data. And I think it's important to then explain why there is a difference, which is often first happening in the press conference. And I think that is important to explain where the difference in opinion is coming from.
Okay, thank you. Let's turn to forward guidance and does it work? Clemens, you obviously are representative of a large international bank. So does it work from a market perspective? I know there are various types that we heard the governor mention earlier. And where can some challenges emerge?
I mean, we heard that it works. Depending on how you define it works. It works in shaping the yield curve, apparently, that we learned. I mean, I found Marco's paper actually very intuitive, right? I mean, it works if you have private information on one side of the market. It works if there's a credibility that can be lost. I think all these things are very intuitive, right? And I think in the financial crisis, a lot of these things were more relevant potentially than now. Now, I think, as I said in my introductory remarks, I mean, nothing comes without cost, right? And the problem I have with forward guidance and to some extent QE is that it interferes with the yield curve. And the yield curve, the result of this has been that what we call term premia have become non-stationary, extremely volatile, and they're not something that you observe, it's something that you basically try to dissect, right? And what is the term premium? The term premium is basically the difference between what the yield curve shows you and what people actually expect interest rates are going to be in the future. And this can lead to big consequences. And I mean, an example I can think of is, if you think of what happened last year. We got into the year and the Fed dots, I think, were showing, the median dots were 3 hikes. If you looked at Bloomberg consensus or Reuters consensus, the analysts were saying in average 3 hikes. Treasuries were at 240, about there. And it seemed like the treasuries were at 240 despite the market basically expecting 3 hikes. But then the Fed started hiking. And the treasuries moved up extremely fast to 320, right? So clearly the market hadn't been expecting 3 interest rates, but we all thought the market had expected 3 interest rates, and the consequences in particular in emerging markets of that move were pretty big, right? I mean, lots of countries were basically forced into pro-cyclical tightening, etc., because we couldn't read market expectations well enough.
So do you have anything to add on forward guidance and pros and cons?
I mean, it depends whether it's done with or without QE, and there's a difference. And I think if you're distorting markets, the signals you're getting back from the market about what will happen in the economy, I don't know what the 10-year Japanese yield curve, bond yields are telling you, apart from the BOJ owns a lot of them. The other thing is there are things that are sometimes mentioned, and it's not necessarily with forward guidance, but as soon, let's take the ECB and the 5-year forward. As soon as you mention it in a Jackson Hole speech and everybody starts paying attention, something that should be telling you about inflation expectations 10 years out starts to move in perfect correlation with the energy prices, which is ridiculous. So you can distort the market with your forward guidance and have signals coming back at you that are not very perfect anymore.
Piotr, do you have anything on forward guidance to add?
Okay, so forward guidance, as we saw in the presentation of Vitas, that was a slide from Blinder. most central bankers believe it will stay with us, at least. However, I have a lot of doubts about it, exactly as Clemens said. To my understanding, the forward guidance is something unconventional, at least to some extent, tool of monetary policy. You introduce that to affect markets because normal policy making does not work properly. And that's not necessarily for normal times. Why? I think first, there is a lot of risk by hard. If you promise something about future policy actions in a hard Odyssean, let's say, way, yeah. Like Swaha, as you mentioned, the Bank of England's case, a very clear example for that. Unemployment rate was unconditionally mentioned as a trigger for policy action. And suddenly there was a surprise because the other things did not match the unemployment, which went down very sharply. When you apply a soft forward guidance, so the hard forward guidance can prove, of course, wrong ex post, which undermines the credibility of monetary policy in the central bank. Ex ante problem appears immediately with soft forward guidance, because what does it mean? It only means that, okay, these are the figures, elements, variables we look very thoroughly to. You can communicate in a different way. That's my view. So I know I'm in a very small minority of central bankers, but luckily I have the support of the markets.
I wanted to move on to scenario communication, the last topic, but to give you an opportunity, if you feel compelled to reply to any of those comments. If you don't, then we are running short of time, so it's up. Okay, great. So just on scenario communication, the theme is transparency versus additional uncertainty. So, I mean, you can look at the way scenarios are used in quite a different range of ways, you know, be it in financial stability or be it for looking at macroeconomic indicators moving forwards and so on. Swaha, I think we've got two people that need to leave. I've been asked to run over because we started late, but I've got two people, who are on hard 12:30 finishes. 1, 2. Any more? No. Maybe I'll ask, in that case, Vitas and Clemens, if you could go first. Vitas, how useful are scenarios from your perspective? Do you worry that they could politicize, I guess, a central bank in some way?
You know, but I mean, the first mandate for I would say every central bank is related with monetary policy. And when you are doing decisions in this area, of course, you have to keep in mind, you know, some possible impacts to other mandates. But first of all, monetary policy. Monetary policy versus, let's say, macroprudential mandates, I do not see a big, let's say, big antagonism between those two mandates, because the first mandate or priority of mandates is related with monetary policy. Macroprudential things are mostly related with domestic issues, and then central bank or other competent authority can use macroprudential tools just to fix some, let's say, subsidiary impacts of the monetary policy decisions. So I think those two things, those two policies can live together very, very well.
Thank you. Clemens, if you could go next, and maybe you might comment on the Bank of England and its Brexit scenarios, since you've been living in the UK for the past 25 years, I think you mentioned.
there anybody from the Bank of England here?
I can see one.
No, I mean, it obviously depends on what kind of scenarios. I must say I'm not a big fan of them. I mean, you have scenarios that, I mean, the Bank of Russia, for instance, does scenarios depending on different oil prices, right? I'm not sure it's that useful because whenever the oil price can fall for all sorts of reasons and you don't exactly know what that scenario will look like, right? So do we know that all the variables are likely to move in one direction or the other, depending on the oil price? Everybody knows that, right? And to which extent that happens depends on what the context is of that shock, right? Now you asked me the difficult question of Brexit. Let me compare it a little bit. When the UK was discussing to join the euro, this was handled very, very differently. I mean, I was one of the academics back then writing one of the assessments for the Treasury, right? And clearly, what had been decided is to move this very political question as far away from, for sure, the central bank, but even the Treasury. Gordon Brown didn't want to have his name on it either. And basically have academics essentially write the assessment, right? And I think in those kind of situations, that's the way you should do that, right? I mean, I don't think, I mean, we can all basically say that the central bank got it wrong, the Bank of England got it wrong, but so did Goldman Sachs, right? So it's not a criticism of the Bank of England's work, but it's very difficult in that situation as not being seen politically biased, and that obviously is what the central bank should always avoid to do.
Thank you. So it is 12:30, so if you do need to leave, please do. Thank you very much to both of our panelists. So could I, Peter, sorry, you've got the mic, so let's go to you first.
Of course, I forgot to say something about the forward guidance, because in individualistic committees, members always, not always, but often also express their views about the future path of interest rates, and it's their good right. But it's not forward guidance, of course, because it's not agreed upon by the majority of the committee. And about scenarios, macroeconomic scenarios, I mean, of course, I believe every central bank does scenarios, but it's internally. We do it, for sure. For instance, we need scenarios for a very simple thing, that we build our fund charts. We publish them around the central path of inflation forecast and GDP forecast based on those scenarios, and probability we assign to those scenarios completely discretionary. But okay, that's a kitchen. That's exactly the stop, the way, or the place where the transparency would be too much. Why? Because when we communicate our forecast, everybody sees, okay, the central bank expects inflation to be above target, below target, with some distribution of probabilities of that. That's one clear message. When we publish scenarios, immediately a question arises, okay guys, but what are the probabilities assigned to those scenarios? It's useless message.
So if I could ask you to speak on that, and how well do you think large media organisations sort of understand that these are scenarios and hypothetical sometimes events, and I guess also the fact that the central bank is doing these scenarios might imply that they think they could be real events, right? So just on scenarios generally, how do you think sort of media responds to them, reacts to them?
I mean, generally very well, because most of the people who are covering this, if you're a large organization, you generally get to go in a lockup to the BOE, the Fed, or wherever, or you have good contacts with the central bank of the country you're working at. It is explained to you if you're not sure. And so most large media organizations like my own, our rivals, would have a very good understanding, if we take the Brexit case, that there is a baseline scenario that the Bank of England is working on. Where the scenarios are useful is, say, you have, let's pretend, I mean, that's not one of the scenarios, but say, were they to do a scenario in 3 months ago about what would happen if the Prime Minister were to resign early. Well, this is the point at which we would be looking back at what sort of impact would a disorderly sort of Brexit, where there's no government formed immediately, if that were the sort of scenario, you can expect journalists to go back and look at that scenario, say in oil price shocks. If there's an oil price shock, what would you expect? So that will be revisited. What is less helpful is when there's pushback and you say, well, you've published this. If you're publishing it, expect it to be used. Either that or keep it for internal internal use only, because there's no point publishing scenario boxes with disaster scenarios. Some tabloid newspaper, even if it's not a major organization, will run with it. So it's in the public domain.
And Christine, if I may put this to you, but actually I also would be interested in your views on the use of scenario analysis in stress tests for financial institutions. And now we've got with the climate risks coming forward. I don't know if that's something that you've paid much attention to. I hope you might be able to comment on it.
Maybe starting first with the climate. We've actually got Fridays for Future walk today from 2 buildings in Frankfurt. So I don't know how that's going, but certainly we are paying attention. But aside from that, there is an increase. We get questions. There's on the one hand you have media questions, but certainly if I look at the amount of public inquiries of people asking, it is very clearly a topic. You can look at it from the banking supervision side. You can look at it from the monetary policy side, and you just got to be clear on what you can and what you cannot do. So we've actually launched, if you're interested, we've just launched a webpage yesterday actually to look at this. And I think we do have a lot of expertise that we can contribute. But again, there it's the boundaries. And if people are thinking that we can do monetary financing for green projects, that's not the point, and that we will not do. But giving our expertise and contributing, that is something that central banks need to look into, because they're there, as we said earlier, also to serve the people. On the banking supervision side, stress tests are hugely useful. They're done in all the big constituencies. Again, the question is, how do you then? It's more again on communication. How do you communicate about them, and how do you ensure that there is a level playing field, and that it helps ultimately the banks, strengthening the banking sector, getting the investors back in. That would be the point.
Thank you. We have run quite late with my questions, but we have probably time for just 1 or 2 questions from the audience. I hope if anyone has a burning question, please, there's a gentleman at the front there. If you could just say who you are and your affiliation as well, please.
Thank you. Hakan Kara from Central Bank of Turkey, Chief Economist. I have a more philosophical or deeper question, actually. There's a growing divergence across societies. So we have more polarized societies in many economies. So polarization between educated people, less educated, and skilled versus less skilled. So, and the central banks are usually more speaking to the educated, people. But does this polarization create any challenges for central bank communication? And what is the optimal way to respond to this?
I have the shortest answer to this question, because the assumption, I don't agree with the assumption of the question. So I think, at least for my country, the percentage of tertiary education, people with tertiary education has increased massively over the last 20 years to, in the younger cohorts, up to 50%. And I think our job is easier now.
Then it'll be nice for you, because I think I'll disagree. So you'll have a bit of a different view on the panel. If you look at the basic concepts, such as inflation, interest rates, it's alarming how many people actually do not understand them, which then poses the questions, how do you as a central bank communicate if the basic concepts aren't understood? And I think the role of financial education, and it seems that everyone is doing something, and sometimes I wonder how we could better coordinate to make that more impactful.
Thank you. Have any other questions? There's a lady at the back in the far corner there.
Thank you very much for this excellent, interesting panel. My name is Elisa Newby and I'm Head of Communications at the Bank of Finland. My question is related to the earlier part of this excellent panel discussion, and it's about forward guidance. So the ECB Governing Council, amongst other major central banks, via more specific forward guidance, they have now clarified their monetary policy reaction function. And this therefore means that it's harder for central banks to surprise markets, as the reaction function is better known by the market participants. And there's more information about central bank monetary policy decision making. So I would like to hear your view about impact of this on efficiency of monetary policy. Thank you.
I think that one has to be to you, Christine.
Well, I think the aim was the reaction function, so that's been achieved. But just maybe shortly, it is state and data dependent, so if you need to change it, you can change it.
Okay. Does that answer your question? Okay. Does anyone else have any questions? Yeah.
Hi, Filiz Ünsal from IMF. I have a quick comment. So much of the discussion here on communication seemed to focus on communication cycle around the monetary policy decisions, so the press release, Q&A. But at the same time, it's also very important to communicate about the monetary policy framework, the strategy, the operational framework. At the end of the day, the public might be more interested in knowing how much central bank is committed to its medium-term targets, depending on its legal mandates, and how they're going to achieve this. So even though they don't need to know how exactly the sausage is made, they need to know there's no dog meat or something inside. So, you know, or you don't need to publish the endogenous interest rate, but the public needs to know whether your inflation forecast is based on endogenous policy rate or constant policy rate. So to me, it seems like there's not that much of a limit in transparency for the framework as opposed to the monetary policy decisions. Thank you.
Piotr, you got that?
Okay, so I haven't mentioned that, but as I was saying, something about the standard of communication, I had in mind also the strategy, of course. And the strategy should be simple, understandable, and of course published. And okay, we have some successes, because if you ask people what inflation in 10 years' time will be, most of them will say nothing, don't know, of course, but some of them will say 2.5%, because it's our target. So for instance, when the government a couple of years ago was applying the expenditure rule, they also set normative inflation in that rule 2.5%. It's a great success, isn't it? So I absolutely agree. The strategy is crucial. And when I mentioned also education, that strategy should be the crux of the education, of course. Yeah. So average citizen, normally people understand what we are doing, and not necessarily how we cook the soup, but the soup should be healthy, okay, for the economy.
Okay, well, thank you ever so much. I think we'll need to wrap up there. I know we've already kept people a little bit longer from their lunches. No one wants to do that, but please do join me in thanking all three of our remaining panelists for their excellent contributions. The organisers have mentioned that there will be a group photo for the communications teams of the central banks, so That will be taking place now, and it will be centered on the stage here. So if you're part of that group, please do come up, and thank you very much for your time.